Hi guys, I hope that you all are good and you all are well. Welcome to Tax 3AB under Dripanomics Tutorials. My name is Rachel Moyo and I am the one who will be conducting the Tax 3AB tutorials. Right, it's gonna be a great year. It's gonna be a nice year. Tax is very fun and hope we enjoy it together. Right. So our first lecture for the semester is VAT. VAT is very important because it can be incorporated in everything. Literally every topic can be VAT incorporated. Why? Because in South Africa, VAT is very transactional. So in every transaction that you take place in, be it CGT, being it whatever it is, whatever gross income, there will be a VAT attachment to it, provided that a taxpayer is a VAT vendor. This is South Africa, you get taxed on your worldwide income, meaning that everyone in South Africa is a taxpayer. But then there are certain circumstances where a person would be a VAT vendor, and we will get into it throughout the slides. So, a quick summary, this is how I do things. First class of the week, we have a theory lesson, right? Because I just want to be comfortable that you guys are comfortable with the theory. So we have a repetition of the theory that you guys did in class and reiterating on things that I think are important. And then the second class of the week, that's where we do a practical question on VAT, either a past paper or a class question, right? Just to get the principles of tax embedded. And then, very important, tax is a very principle based module. It's very technical, meaning that you do have to make sure that you're studying your theory, make sure you're studying your principles and your rules, because the testing is now in the application of those skills, those principles, and those rules. So, very important when you're studying tax, it shouldn't be a thing of you're hurrying to do the question papers. It should be a thing of mastering your principles first, mastering the rules, and then applying them. That's why tax is a technical subject. Quick summary, what is VAT? So, VAT is very transactional. There's two types of VAT. There is input VAT and there's output VAT, right? Input VAT is charged on purchase, is levied on purchases. So as a VAT vendor, when you are making purchases, you will be charged in VAT, right? Therefore, you can claim back input VAT, because if you are making taxable supplies, meaning that your supplies have VAT on them, it means that for whatever you use to make those taxable supplies, you can then claim VAT from SARS. That's what input VAT entails. Then there's what we call output VAT. Output VAT is if you as a VAT vendor, you are providing taxable supplies to your customers, right? You then charge output VAT on that, and then that output VAT that you charge on your customers, you then take it and pay it over to SARS. The calculation is very simple: is your output VAT less your input VAT. Depending on what is greater, either your output VAT or your input VAT, that's when you know whether the amount is payable over to SARS or it is SARS then owes you. Hence, as tax individuals, taxpayers, you have to complete your VAT return depending on the type of category that you are, category VAT vendor that you are. Right. So that's a quick summary of VAT. There we go on with the slides. Right. So what is VAT? Right. A transactional indirect tax, currently at 15% since the 1st of April 2018. As I said, that VAT is very transactional. It is on each transaction that you make. So it's not an aggregate of something. Every transaction that you make as a taxpayer, you will be charged VAT on it. For example, when you go to the shop, every single thing that you buy will be charged VAT. Let's say I buy Coke, I buy Coke, I buy stationery, I buy I buy I buy what? I buy yogurt, right? All these three items will be inclusive of VAT, right? Even your slip shows you would see this was the amount of VAT that was charged and this was the amount exclusive of VAT, right? So VAT is very transactional. It's per transaction that you make, right? And then it's currently at 15% since the 1st of April 2018. Very important, the budget speech is very up in about, I think, around March. Very important that you watch it, because sometimes they do incorporate it into your AO1s or your tests. So what if the VAT percentage changes to 15.5, right? So like, for example, as we were asked the question of what is our input on the VAT potentially having to increase, right? So watch out. And then it wouldn't be big marks, it would be like maybe 2 marks, for us it was a 2 marks. So if you want to claim those marks, yeah. So components of VAT, as I say, there's VAT input and there's VAT output. Apologies, there's a mistake here. This is VAT output. VAT output charged on supplies. It's charged on your sales and it's paid over to SARS. As I said, as a taxpayer, if you're making taxable supplies, meaning that VAT is bound to be on those supplies, then you charge output VAT, right? Charge output VAT to your customers, and then you take in that VAT and pay it over to SARS. And then you then claim input VAT on the purchases that you make. So you make purchases from your suppliers so that you can make your taxable supplies. Therefore, because you are a VAT vendor, then you can claim input VAT from those purchases and claim it back from SARS. Right. And then there's this rule when it comes to input VAT, right? Sometimes a taxpayer, there's different supplies of taxable supplies. We'll get to the slide, right? Sometimes it can happen that the amount of taxable supplies are not fully, like not 100% of the taxable supplies are taxable, right? So if 95% of those supplies or more are taxable supplies, then you can claim full input VAT. But if it happens that your taxable supplies are less than 95%, then you have to apportion the amount of input tax that you can claim. For example, I have 10,000, I'm producing 10,000 Rand worth of goods. And then 90% of those goods are taxable. We agree 90% of 10,000 is 9,000, right? And that is not 95%. 95% would have been 95,000. It's 9,000, meaning that it's less than the 95%. Therefore, when I claim input VAT on those 10,000 Rand worth of supplies, I can only claim 90% of those goods because I only have 90% worth of taxable supplies. If it happened that I had 95,000 worth of supplies, 95,000 Rand worth of supplies out of that 100, out of that 10,000, right? Out of that 10,000, I have 9,500 worth of supplies. It's more than 95%. It's equal to 95% and more than 95%, meaning that I then can claim the full input VAT on the full 100,000, right? If it's less than 95%, I have to apportion it, like the example I made. Out of 10,000 Rand worth of goods, I only have 9,000 Rand taxable supplies, meaning that I have to apportion it according to 9,000 over 10,000, meaning that that's 90%, right? So that is me explaining these 2 bullet points. Right, VAT is levied on the supply of goods and services by a vendor in the furtherance of its enterprise, either 15% or 0%. Right, this is due to the type of supplies that you make. There's supplies we call standard rated supplies, and then there's supply we call zero rated supplies. Just because it's zero rated doesn't mean there's no VAT on it. There is VAT on it, and it's VAT at 0%. Right, and then standard rated supplies, it's VAT at 15%. And if the company or the individual is not a VAT vendor, they pay the full price including VAT and cannot claim input VAT, nor can they charge VAT on the goods or services that they provide. So there is a rule of when a person can register to be a VAT vendor, right? And when they must register to be a VAT vendor. But sometimes they can't be a VAT vendor, right? So if they are not a VAT vendor, they cannot charge tax on the goods that they are providing to their customers, and because they are not a VAT vendor, they cannot claim back input VAT because you are not a VAT vendor, you have nothing to do with VAT. Therefore, you can't claim input VAT from SARS, and you can't charge output VAT on the goods or services that you're providing to your customers, right? Then all VAT vendors submit their VAT returns at the end of each month, each tax period. So the tax period is dependent on the type of category that this VAT vendor falls under, right? We'll get to it, and yes, but then it's very important that they submit their VAT returns. Everything when it comes to tax, whether it's VAT or income tax, the onus is upon the taxpayer himself to do the calculations himself. SARS is a way that you're making input. SARS is a way that you're making income. But they put the onus on you to calculate what you think you owe SARS or what you think SARS owes you. And then SARS will then do their own calculation, and then based on whatever they come up with, that's when they know whether you owe SARS or SARS owes you. So taxpayers, they are subject to submit their VAT returns depending on the type of category that they are on, right? And the source of the information relating to the amount. So this is very important. As I said, that VAT is very important. It's going to be incorporated from here until November. It's going to be incorporated. And the thing comes with determining whether an amount is inclusive of VAT or exclusive of VAT, right? When they give you a value or a market value, just know that it excludes cost or consideration, it includes VAT. If they're giving you trial balance amounts, then it excludes VAT. Because why? Remember, as accountants, we are first going to do our general ledgers before we move to our trial balance. So when we are doing our general ledgers, we are going to take out VAT. Remember, there is a contra account that's called VAT input or VAT output. So you are going to take out the VAT before you transfer your amounts to your trial balance. Therefore, that's why your trial balance amounts will be excluding VAT. Then you have your invoice amount. Your invoice amount is what you're invoiced at. So it's the full amount that you're paying. Hence, it will be inclusive of that. What was paid will be led by the scenario, because sometimes in the scenario they will be specific. This amount includes VAT or this amount excludes VAT. So what was paid, when they give you amount of what was paid, you will be guided by the scenario to know whether this amount is inclusive of VAT or exclusive of VAT. Very important, they even tell you in the scenario that the amounts are inclusive of VAT unless stated otherwise, right? Or the amounts are exclusive of VAT unless stated otherwise. So it's very important that you're reading your information and your scenarios very clearly, because then sometimes information is given there and we as students tend to miss it, right? And output tax, taxable supplies, right? Remember, as a um, as um as a VAT vendor, you are selling to your public, to your customers, right? And as you're selling to your customers, you are charging output tax on your goods. Why? Because you are a VAT vendor. When you are a VAT vendor, you charge output tax on your goods that you're providing to your customers, right? So there's three types of supplies that you can be providing. There are standard rated supplies, and these standard rated supplies means that you're charging output VAT at 15%, or zero rated supplies, meaning that those zero rated supplies you are charging VAT at 0%. Even though it's a zero rated supply, there's still VAT on it at 0%. And then there's also exempt supplies. Very important, the distinction of making sure that if something is zero rated, you have to state the VAT at 0%. Why? Because sometimes as a taxpayer, as a VAT vendor, you are making taxable supplies that are zero rated, but you are using supplies that are standard rated. Therefore, remember, as a VAT vendor, if you are charging output VAT on your goods, you can then claim input VAT from SARS. So let's say you are providing, let me think. Let's say you are providing VAT, brown bread. Brown bread is a zero rated supply because it's a, it's those things that they're just said to be zero rated, right? But then you are using things that you bought flour, they charge VAT on flour. You bought yeast, they charge VAT on yeast. So when, as the VAT vendor, when you bought your flour and when you bought your yeast, you bought them inclusive of VAT at 15%, right? But when you are selling bread, brown bread, and when you're selling that brown bread, you're selling it at a zero rated, meaning that even though you are selling something at zero rated, you can still claim back that 15%. So that's why it's very important that your zero rated supplies, you still show the VAT that you are calculating it at 0%, right? And then registration, remember, there's two scenarios whereby as a VAT vendor, as a taxpayer, you are forced to register for VAT, right? You have to register for VAT if your taxable supplies are more than 1 million in the previous 12 months. So if in the last 12 months you made taxable supplies of more than 12,000, you have to register for VAT, right? And if you are estimating that your future business and your contractual commitments, you are going to make taxable supplies of more than 1 million, you still have to register for VAT, because you can see how your business is growing. No, man, we are coming good here. We are coming good. We are making more than 1 million. And I anticipate in the future we're going to make more than 1 million. You have to register for VAT. Because now if you don't, there are certain penalties that you're going to face, because now you're making taxable supplies of more than 1 million, but you're not registered for VAT, right? So, SARS is a thing of you give to Caesar what belongs to Caesar. Right, very important, because they're going to use this money for infrastructure. SARS uses this money for infrastructure, building roads, building hospitals. It's the VAT money, the tax money that they use, right? And then you as a VAT vendor would then be given an option to register for VAT, right? You can voluntarily register for VAT if your turnover in the last 12 months is more than 50,000. So if it's more than 50,000, you can decide, you know what, I want to register for VAT. Why? Because remember in the scenario I gave you of the bread, you might be making zero rated supplies, right? But then you are buying supplies at a standard rated supply. So a taxpayer would want to benefit from claiming back input VAT. Right, so that's the reason why a person would want to register for VAT, right? And then when they want to register for VAT, when they're earning 50,000, they must initially register on a payment basis and then switch to the invoice basis once the 50,000 has been reached, right? And then a person who has two separate enterprises should register as a VAT vendor for both. So sometimes it can happen that a person has more than one business, right? Maybe they have a restaurant and then they have a hotel on the other side. You have to register both businesses for VAT, right? And then categories. Remember, we spoke about taxpayers falling under VAT vendors falling under specific categories, right? There's a category A, and then a category A, they have to submit their VAT returns every 2 months starting from Jan. So it's January, you skip a you skip a month, March, skip a month, May, you skip a month, so on and so on. And then category B is also every 2 months starting from Feb. So it's Feb, you skip a month, April, you skip a month, June, you skip a month, so forth and so forth. Category C is every month. You have to submit VAT every month. And here it's only when your taxable supplies are more than 30 million. When your taxable supplies are more than 30 million, you write to SARS and tell them that my taxable supplies are more than 30 million. Therefore, I would like to register as a type C, a category C, where I'm going to be submitting my VAT return every month. Think about it. If you're making taxable supplies of more than 30 million, that means every month there's a lot of money coming into your business. And you are buying a lot as well to make the taxable supplies that are going out of your business, right? Meaning that because you're producing so much and making so much sales, there is also so much input VAT that you can claim. So it's going to be very cumbersome if you are waiting till the end of the year to claim that VAT back, right? So it's better that you do it every month, right? That's just for efficiency purposes, right? And then category D is every 6 months. This refers most probably to farmers, right? So it's very important to know these things because it's more theory that they can ask in your exam question, right? And then you have a category E. This is where they submit their VAT return once a year, and then this is solely for businesses letting out of property. So if it's a business that is letting out property, then they qualify to be a category E. Refusal of registration by SARS. So sometimes SARS can say, okay, sharp, you want to register for VAT, but you can't register for VAT, right? Why would they refuse you to register for VAT? That will happen if a person has no fixed abode, no fixed place of business, there's no proper accounting records, there's no bank account for the enterprise, if the VAT registration previously cancelled due to him not performing duties under VAT Act. Right. So if these things are satisfied, SARS will be like, hey, my brother, my sister, you can't register for VAT because you don't have proper accounting records. Therefore, we are not sure whatever amounts that you're making, is it right? Right? And then cancellation of registration. Sometimes as a taxpayer, you can see, no man, I'm not making money here. I'm not making my anticipated money. Therefore, you can apply to SARS in writing and say, SARS, can I please be cancelled to be a VAT vendor because now my money is going to you and I'm not making money. And that's in the case where their taxable supplies are now less than 50,000. The taxable supplies are now less than 50,000. They can no longer, they can then apply to SARS and ask to be cancelled as a VAT vendor. Registration of e-commerce suppliers. So there are certain suppliers whereby their business is solely online, right? It's online. They sell their things online. Let's say, for example, Shein, they sell things online. So they qualify to be e-commerce suppliers because now they don't physically sell their stuff. They sell it online. And then they have to register for it as e-commerce suppliers if their taxable supplies that they are selling over the internet is more than 100,000, right? And this rule started from the 1st of April 2019. Time and value of supply, right? In tax it's very important to know when something is going to be paid, when something has to be submitted, and at what value it's supposed to be submitted, right? So we have this time and value of supply in tax and in VAT, right? So VAT specifically, there's a general rule. The general rule is the default. It's a default. The time of supply is the earlier of invoice or payment, right? So whatever comes first, whether you receive an invoice first and you have not received your money, the fact that you received an invoice means that you are unconditionally entitled to receive that money. Therefore, you can account for VAT. If you receive the payment first, then you can still account for VAT. So it's the earlier of the both, whether the invoice came first or the payment came first. Then the value supply is charged on the consideration received. Right, it's charged on the consideration that you received, multiplied by 15 over 115. Commercial accommodation. So commercial accommodation is like a hotel or a B&B. You are providing lodging or boarding services to customers. They come there, they stay for a short while, right? They never stay more than 28 days, right? An unbroken period of 28 days. So if they're staying there for 28 days or less than 28 days, your value of supply won't be the consideration received. So your value of supply would be the consideration that you received multiplied by 60%, multiplied by 15 over 115. So out of the consideration you received when it comes to a commercial accommodation, you will only include 60% of that consideration. Then you'll calculate the VAT on that 60%. So it's the full value that you received, which is the consideration, multiplied by 60%, because we are only going to include 60% of that consideration, multiplied by 15 over 115. Right? And it should be a lodging or boarding together with domestic goods and services. Very important, this is not a residential accommodation. If it's a residential accommodation, then it's a zero rated supply, meaning that the VAT there would then be 0%. Right. So zero rated supply, just want to. So this is a list of the zero-rated supply, right? A very comprehensive list. There is also another list in the textbook, the Haupt textbook. Very important that you go through it. But the most testable things is exported goods, sale of going concern, fuel levy goods, and basic foodstuff, and international transport. So this is the ones that I've seen a lot since my third year or second year. So yeah, there's a list of the zero-rated supplies, and then there's the list of exempt supplies. The ones that we see a lot is the educational services, financial services, and church or after-school supervision, so financial services. Right, so those are the ones that we see a lot. But very important that you go through the whole list, because you never know what you get tested on, right? Reasoning for zero amounts. Remember, if you're a VAT vendor and you're making zero-rated supplies, you're going to be charging VAT at zero, right? Meaning that anything multiplied by zero is going to be zero. If you are providing exempt taxable supplies, it's also going to be at zero. But there's this thing with tax. You don't just give an amount of zero. They want to know, why is that amount zero? Because value in tax, if an amount is zero, there is a reason why it's zero. It's not just that when you did the calculation, it's zero. So it's very important going forward that whenever you give a nil amount or a zero amount, you have to substantiate why is it zero. So reasons why the amount would be zero is because either the taxable supplies are zero rated, or the taxable supplies are exempt, or it's not subject to VAT, or it's input denied. Right, and then tax invoice. Could come as a theory question. Very important to know what a tax invoice is supposed to entail. First of all, the word tax invoice is very important. The word tax invoice must be on that invoice, because that's then showing that this thing is subject to tax and is subject to VAT. Right. When it comes to the supplier's details, the name has to be there, the address, the VAT registration number has to be there. Same with the recipient, the name, the address, the VAT registration number has to be there. In terms of the invoice contents, the individualized serialized invoice number has to be there, the date the invoice was issued, the description of the goods supplied, and the quantity of the goods supplied. And deemed supplies. So this is part two. This is part two of VAT, right? So remember, we spoke about the types of taxable supplies, and we said at standard rated supplies, there is what we call deemed supplies. So the word deemed supplies, like they deem it to be a supply. So basically, deemed supplies is supplies that were not supposed to be taxable supplies. It's not supposed to be taxable supplies, but because of the nature of the transaction, remember VAT is very transactional. So because of the nature of the transaction, SARS then deems it to be a supply, right? The types of deemed suppliers is fringe benefits, person ceases to be a vendor, disposal of a going concern, and an insurance claim. So fringe benefits, I'm going to start with fringe benefits. At this point, I am not expecting you to be very equipped in terms of knowledge relating to fringe benefits. But the one that's going to be asked the most is going to be the fringe benefit relating to the right of a use of a motor car. That one is definitely going to ask it, right? So what is fringe benefits? Um, as a person, you'd be working for a company, right? And then the company gives you benefits, certain benefits. Sometimes they will give you a car and they'll say you can use this car, right? Sometimes they can give you a laptop and they'll say you can use this laptop. That's a benefit. Sometimes they'll pay for your medical aid. Sometimes they'll pay for your holiday. That's considered a fringe benefit. And a fringe benefit is considered a fringe benefit when there's an employer and an employee relationship. So it's very important to establish that there is an employer and an employee relationship. That's then whatever benefit they get will be referred to as a fringe benefit, right? So let's say we are in a company, I have a company and I am making watches, right? And I give those watches to my employees, right? I'm the employer, I give my employees the watches, right? I'm in the business of making watches. So SARS, when they look at my things and they're like, okay, sharp, when you bought 10, you made 10,000 watches to sell to the public, but then you gave 5 watches to your employees, and then the others they were sold to the public. SARS deems it uti those 5 watches that I gave to my employees, they were also sold, right? They see it as a sale. They see it as a sale. So hence it's a deemed supply. Right. So if it's a deemed supply, because remember now I am the employee, I am giving it out to customers and I'm giving it out to employees, meaning that it's a deemed sale. It's a deemed sale, and because it's a sale, there will be output VAT charged on it. Right. So when it comes to fringe, all your deemed supplies, it's always dealing with output VAT. All your deemed supplies are dealing with output VAT, right? So that is a fringe benefit. And how will you then calculate it? It would be your fringe benefit multiplied by 15 over 115 for all your deemed supplies. That is how you're going to calculate it. The value multiplied by 15 over 115. When it comes to fringe benefits, it's the fringe benefit value multiplied by 15 over 115. Right? And the VAT is payable on the value of the fringe benefit. No output VAT applies if the fringe benefit is a tax-free fringe benefit, an exempt supply, a zero-rated supply, supply of food, accommodation, or entertainment. Right? So if it falls under these categories, it's an exempt supply, a zero-rated supply, or it's entertainment or supply of food or accommodation, then there will be no VAT output on it. There will be no VAT output on that fringe benefit. And remember, the reasons for saying zero. So if that thing is entertainment, you're gonna say zero because it's entertainment. There's an example here. There's also part of your slides. The use of a holiday home. When you're taking someone out on a holiday, you are entertaining them. So it's entertainment, therefore they will that. Residential accommodation. Remember we spoke about residential accommodation. Oh, by the way, I made a mistake. It's not zero rated. It's exempt supplies. Use of residential accommodation is exempt. It's not zero rated. It's exempt. Use of a company yacht, going out on a yacht, that's entertainment, therefore there's no VAT on it. Shares and share options excluded from the 7th schedule, therefore there's no VAT. Gifts of electronic equipment, this company was providing electronic equipment as their business, therefore it was not entertainment, therefore you do account on VAT on that. Meals, remember the supply of food, you do not, it's entertainment, you don't claim VAT on that. Interest-free loans, no, it's a financial service, therefore it's exempt from VAT. And then tax-free long services awards, it is not a fringe benefit. And then the fringe benefit relating to a right of use motor car. Remember, we spoke about the right of use motor car. This one is definitely going to be asked. Might not be the test one, but they definitely want to ask us, right? Right of use motor car. So what is a right of use motor car? A company will say, go to shop. You are working for me, therefore I'm going to give you this car so that you can use, right? Because let's say you're staying in Tembisa and the company is in Sentin. You can't be taking taxis all the time. It's very tiring. Therefore, they will give you a car and say, this is the car. Sometimes they will substantiate that with they will accompany that with a travel allowance, right? So the right of use motor car. there's a calculation for it of how you calculate the VAT on that fringe benefit, right? So now we're including fringe benefits. For sure, you're asking yourself, what's going on? We are just calculating the VAT on the fringe benefit. So how do we calculate it for the right of use motor car? First of all, you start with your value of the car. The value of the car multiplied by either 0.3% or 0.6%. If it is a motor car, you multiply the value by 0.3%. If it's a motor car as defined, right? There's a definition of a motor car. If it is a motor car as a definition as defined, if it's a motor car as per the definition, you multiply it by 0.3. If it is not a motor car as defined, you multiply it by 0.6. And then from there, there's a reduction rule. There's certain things that you can reduce. And you're only going to reduce if you have to maintain the car. And then the dim supply is reduced by the lesser of. So if they tell you that you are responsible for maintaining the car, you can reduce the amount you get from the top here by either 85 rand per month or by the deemed consideration that you pay for maintaining the car. All right. So first of all, you get the value of the car. You multiply it by either 0.3% or 0.6%. Whatever amount you get there, you can then reduce by either 85 rand or the deemed consideration, provided that you are maintaining the car, not the employer. If the employer is the one maintaining the car, then you do not have any reduction. And then from there, that amount will then be calculated by the months. If you are a category A or a category B, the amount you get there, if you are a category A or category B, so the amount that you get here, you will then multiply by 15 over 115, and then depending on the type of category that you are under, you will then multiply it by either 2 months if you are a category A or category B, or by 6 months if you're a category C, I think. So yeah. A person ceasing to be a VAT vendor. So remember, we talked about when a person cannot decide to uti, I'm deregistering for VAT because I'm making taxable supplies of less than 50,000. Therefore, I can't anymore. It's fine. So the rules that any goods forming part of the enterprise on which VAT input was claimed are deemed to be supplies made immediately prior to ceasing to be a VAT vendor. So whatever sales you were making before you deregistered, that would be considered to form part of the enterprise, and then you'll have to charge output VAT on that. That's deemed supply. That's a deemed supply. It's a deemed sale. All right. So the value would be the minimum of the cost of market value, whichever is the lower. So if the market value is the lower, you will use the market value. If the cost is lower, you use the cost value. So it's the lower of cost and market value multiplied by 15 over 115. Remember, I told you all deemed supplies you're going to multiply by 15 over 115. And then insurance claim, it is also a deemed supply. So what is an insurance claim? An insurance claim is you are paying insurance for something. You're paying, so let's say your company is providing laptops. For example, you're selling laptops, and then you know that anything can happen. It's either they can get stolen, or a fire can happen, or there can be a flood or whatever, right? So you insure those laptops, right? So you are paying insurance you are paying insurance for your laptops, right? So now it happens, Uguti, and the amount that you're paying insurance at is inclusive of it, right? And now it happens, Uguti, your laptops there's a fire in your factory, and then the laptops get burnt. Now there's no laptops, and then now the insurance has to pay out, right? Let's say now the laptops they bent, and laptops to the value of 1 million bent, and then the insurance is like, okay, sharp, there's proof ukuthi vele there was a fire, the laptops bent, here's 1 million, because vele you were paying for insurance, you insured these laptops, here's 1 million. So SARS is like, okay, sharp, in as much as the laptops bent, you still got money for those laptops, and I'm going to charge you for that money, because remember, SARS likes money. So SARS deems that even though there was an accident and those laptops burnt, the mere fact that you got money from your insurance, it's a deemed sale, right? Therefore, deemed output VAT will be charged, right? So, but then if the insurance decides to give you the goods back, then SARS can't charge VAT. SARS cannot charge you VAT because now you got the goods back, you didn't get the money, right? And then, so yeah. Indemnity payments is when a vendor receives an indemnity payment from an insurer. Payment is deemed to be made for services rendered by the insurer to the insurer, and then no output VAT charged if it's a total reinstatement, if the input VAT was denied, and if goods were stolen or damaged beyond repair. So the calculation is like this, right? Here's an example. So a VAT vendor insures a delivery van and they pay a premium of 500 per month, including a VAT. The van is damaged. The vendor receives 51,000 from the insurer for repairs. So this is what happened. They have a van. They insured that van and they were paying 500,000 for that. 500 rand to insure that van per month, and that amount was inclusive of that. Now it happened to the van now damaged. The van is damaged, and then the insurance was like, okay, it's fine. We'll give you 51,000 for repairs, right? And then vet is like, sales is like, you got money, you are going to charge output VAT on that amount that you got, right? So how is your VAT treatment going to be? First of all, on the indemnity payment is the insurance payout that you got of 51,000. You're going to take that amount, multiply by 15 over 115. The 6,752 would then be the VAT output side of it. Because remember, it's a dim supply. Dim supplies deal with output VAT, and you multiply it by 15 over 115. Right now, because you were paid, the vendor was paying 500 rand for monthly premiums, they can claim VAT on that because they were paying, right? So on the 500 rand, it will be the 500 multiplied by 15 over 115, the 65,22. Then they can claim that amount from SARS, right? And then input tax denied. There are certain things that SARS just says, here you cannot claim input VAT. You won't claim input VAT. It's entertainment expenses, if a car is a motor car as defined, and subscriptions, right? So entertainment expenses, if there's food, beverages, accommodation, amusement, entertainment, the rule is that input VAT cannot be claimed back. The exception is if that vendor is in the business of entertainment, right? So if when your business, like for example a cinema provides, you go there, you watch movies, right? And then they provide you with popcorn which you can buy, they provide you with drinks which you can buy. In that case, they can claim input VAT. Why? Because they are in the product, their business is to entertain people, right? So they can claim VAT. But if you have an office in Sentin and then you decide when you want to buy your employees KFC, you can't claim input VAT because why are we buying them KFC? That's entertainment. You're entertaining them. Yabo? So then you can't claim input VAT. And then motor cars, this is what is a motor car is defined. Motor cars, station wagons, minibus, double cab, motorcycles, or vehicles with more than 3 wheels converted to carry passengers. If it falls under here, it is a motor car and you cannot claim input VAT from that. The exception, though, is that for vehicles carrying more than one person, for example, a hearse, and then a vehicle carrying more than 16 people, for example, an airplane. An airplane, they will be in the business of transporting people, so therefore they can claim input VAT. Then fines or subscriptions, those ones are always prohibited from VAT input deductions, right? So, ladies and gentlemen, that was the theory part of VAT. VAT is very nice. It's principles that you should make sure that are embedded in you now as it is early, because they will come back. VAT will come back, and it's always going to be a thing of you either mess up a paper because you don't know your VAT rules, or you do good on that paper because you know your VAT rules. So see you again on our practical class, and enjoy the rest of your day.